Before I begin to this video, let me give a quick disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. My information is not intended to be legal, financial, or an investment advice. Always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts.
Welcome back to Talk Stocks with me, where we turn market noise into clear signals. Before diving into today's technical analysis segment titled When You Should Buy, Sell, or Short a Stock, let's quickly set the scene with a rundown of the key macro and market events from the past week, that is May 26 to 30th, 2025, that shaped investors' sentiment. Let's begin with the stock market performance. The S&P 500 posted heavy gains in May, marking its best monthly performance since 2023. The Nasdaq also posted significant gains, driven by strong tech sector performance. In the front of tariffs, a U.S. federal court ruled President Trump's broad use of tariffs under the International Emergency Economic Powers Act (EPA) was illegal, leading to a rally in global stock markets. Similarly, President Trump delayed imposing a 50% tariff on European Union imports until July 9, providing relief to investors and boosting market sentiment. Lastly, President Trump reignited trade war fears, accusing China of breaching its trade pact. That shook the markets also early in the week. In the front of inflation, the personal consumption expenditures, which is the PCE index, showed inflation moderated more than expected in April, with headline inflation cooling to 2.2% and core inflation steady at 2.6%. April's PCE index surprised to the downside, raising hopes of a potential Fed rate cut later this year. And lastly, in the front of consumer sentiment in May remained unchanged from April, ending a 4-month streak of declines. While expected businesses conditions improved mid-month due to a temporary pause on some tariffs on China goods, this was offset by declines in personal finances stemming from stagnating incomes. So now that you know the why behind the market's mood, let's shift gears and talk how to approach stock timing like a pro. We are breaking it all down using Weinstein stage analysis, and yes, we've got real stock charts from the US and Nigerian markets to bring this theory to life. Let's go. Ever wondered if you are buying a stock right before it crashes or selling just before it flies? Let me introduce you to a method that's been around since the 80s and still holds its weight. Weinstein stage analysis. Let's break it down. There are just 4 stages you need to recognize to stop guessing and start trading with confidence. Let's begin with the stage 1, which is the accumulation phase. Stage 1 is the quiet before the storm. This is where smart money starts buying. Price is moving sideways, volume is low, and nobody's paying attention. The next logical question is, so is this where I should buy? My response is almost. Patience, please. In this phase, you have to follow a wait and watch approach. You want to buy just as we enter stage 2. Now let's talk about stage 2. Stage 2 is the advancing phase. Boom! Breakout on volume, we're in stage 2, which is the uptrend. This is where you want to be long and strong. Now, you've bought. How long do you hold? As an investor, as long as the stock keeps climbing and respecting the 30-week moving average, this is where fortunes are made. Next is the stage 3, which is the distribution phase. In stage 3, the trend flattens. Sometimes volume spikes. Institutions are offloading, not panic selling. Remember, this is distributing. So you might ask yourself, should I sell here? Yes, if you've been holding from stage 2, this is your exit. However, if you are aggressive, you should start planning to sell shorts. Now we get to the last stage, which is stage 4. This is the big drop, the downtrend. This is where short sellers thrive and longs get crushed. So you might ask, is this when I should short? Exactly. Once the 30-week moving average turns down and price breaks support, it's game on. Guys, please master these 4 stages and you'll never look at a chart the same way again. So next time you're tempted to buy a stock, ask yourself, what stage is it? Alright, let's look at some real charts to bring the theory in. Let's begin the technical analysis segment by going through 5 stocks from the US stock market and the NGX, which represents the Nigerian stock market, to show how the stage analysis can be used in practical effect. What I have on the screen here on my trading view charting interface is the S&P 500, and I'm working on the weekly chart. So the stage analysis has presented by the author in the original version works on the weekly time frame. I also have another indicator here, which is the Mansfield relative strength indicator that shows me how a given asset is performing relative to the overall market. In this case, the overall market is the SPX. So now let's begin by looking at GEV, which is GA Venova, which is one of the top stocks in the industrial sector from my ETF smart sheet. So remember, my ETF smart sheet, I'm able to find the top groups, and within the top groups, I'm able to derive the top stocks using my custom talkstockswithme weighted score. Now, here I've created this indicator after consuming the theory from the original text by Weinstein. I'm going to show it on screen here, and you can see here I defined it how Weinstein stage screener, which identifies the different stages of a stock 1 to 4. Now, if we come here to some of the results that are presented, the way I presented this result is the 4 stages here are color coded and they identify. So you can see stage 1 accumulation, which is in blue, which is color coded as blue. Stage 2 advancing stage, color coded in green. Stage 3 color coded in purple, and stage 4, which is declining phase. This here is also the 30-week SMA. Remember, this works on the weekly chart. Now, let's look at this chart and let's interpret what stage we are. Now, how this works is that these are flags. They can give only 2 values, 0 or 1. And for every location or every candlestick you are, only one of these 4 has to be activated, because you can't have a stock that is in 2 stages at once. That doesn't make sense, right? So wherever stage we are, you're going to see that activated with a 1 value. Now let's look at the chart briefly. Now we are currently here. This is the week we are. This is the week that just concluded. This looks like, this candle really looks very indecisive, but that's not the focus of this video. This video is to identify what stage we are in the stock before we make our buy or sell decision. This white line here is the 30-week SMA. Clearly, the code tells us that we are currently in stage 2, because you can see that 1 is activated in the green here, which is the green one here, which is the stage 2. Remember, stage 1, stage 2, stage 3, stage 4. So if we come here, we are in stage 2. So this stock has been in the advancing stage. You can see it here. Even if you go here, you can see the stage 2. So all this stock has been in stage 2. So an investor will have bought in once you broke out of stage 1 here and just sat down there patiently. Let's see how much you would have gained with this approach. So this is the breakout candle. Once you see this breakout candle, your stop loss will be set below this low here. And let's see how much you'll have done. Assuming you got in here, this is at the peak, this was a 31 return in the space of 1, 2, 3, 4, 5 weeks. That's how powerful this Wednesday stage analysis. Let's look at the next stock, Nvidia. Everybody knows Nvidia. Everybody's dogs, everybody's salon hairdresser, they all know Nvidia. So let's look at it on the chart also, and let's see what the stage analysis, or what stage this stock is. Now, clearly, this is also the price action. You can clearly see where it broke out of stage 1 here, and this is where we're in stage 2. So you can see it on the chart here. Let's look at it here. Here you can see, if when we're here, this was stage 4. You can see all this is stage 4. You can see that is activated. You can see stage 4. But when we got here, when we broke out of this 30-week SMA, you can see it's in stage 2. You can see the green. And let's follow it. Stage 2, stage 2, stage 2, stage 2, stage 2, stage 2, stage 2. But currently, where are we? Let's just focus on where we are today. So if I come to this candlestick here, this is stage 3. You can see the purple. And what is stage 3? Stage 3 is distribution. This is where you're stopping, where institutions, according to theory, but it might not necessarily be so in terms of institutions unloading, but this is a topping phase. So ideally, because you can also see the moving average is sloping downward. You really want a moving average that is sloping upward. So that is how you can see that this stock has moved, and it's fair enough. Look at what you got in for stage 2 movement, almost 835%. So guys, look at how powerful Weinstein stage analysis. And from the breakout, you always set your stop loss, if you find it, below the low, and you move the stop loss based on the lows. If you want me to tell you in the next video how you move your stop loss with price action, let me know in the comment section. The next stock that I want us to look at is let's look at Microsoft. Let's look at Philip Morrison. Yes, Philip Morrison. That's one strong stock also that belongs in the, can't remember right now, but it's one of the strong stocks that belongs to one of the strongest group yet today. Now, again, let's look at the chart action. And you can clearly see the stock has been in stage 2. You can see that stage 2 price action. And from the breakout into stage 2, which is here, you set your stop loss. Worst case here, let's see how much you will have had so far. This is 99, 100%. But this is the power of stage analysis. Now let's switch it to the Nigerian stock market to see if this Weinstein stage analysis is applicable. I've heard so many rumblings in the Nigerian market that, oh, it's different. Here, the market doesn't move more than 10% in a day. It doesn't drop more than 10% in a day. Nigerian market cannot be different. It still has to honor price action. Enough enough cho. Let's put some price actions on chart. Let's start with Wando. Let's look at Wando. Very controversial stock, but let's look at it. Let's analyze it with Weinstein stage analysis and my implementation of the theory. Yeah, this is taking a while to load, but yeah, let's keep waiting for it. Good. Now, again, something that I skip is that, you can also see a visualization of the stages beneath here, but let's just focus. I prefer the manual way of identifying, but beneath here, you can also see what stage you are. Clearly, there was a breakout here. Look at this. Here, we're in stage 1. You can see that stage 1. And this was a breakout out of stage 1. You set your stop loss below the low here. And let's look at how much you made if you had followed this stage 2 signal. So assuming this was the breakout, you got in here and you rode it maybe to the peak. Nobody times it. Nobody can get the peak. So let's just find somewhere. Let's be fair and let's make it here. This is a 368% gain. Because here you broke into stage, let's see, here you got into stage 1. You can see you're in stage 1 here. But one way you can identify when the structure is also broken is by drawing trend lines. So for instance, if I do this, once the price action, because this is like a support, once it broke through this, then I know, yes, this is a short stock. Unfortunately, we don't have shorting in the Nigerian stock market. But where are we currently in this stock? So if I come to the current candlestick, we are in stage 4. We're still in stage 4, guys. No matter, even though you are seeing this rally so far, we are still in stage 4. It doesn't mean you might not trade it here because there was some rally here. But if you want to follow Weinstein's, you don't buy a stage 4 stock, irrespective of the media. Wait till you get into stage 2 before you buy. Now let's look at another stock in the Nigerian stock market. What comes to mind? Which is one of the biggest movers in the Nigerian stock market? Let's pick Fitsin. Let's look at Fitsin. Perhaps we might take one more just so that, to show you the applicability of this code and this theory. So let's open Fitsin Technologies to see what stage the financial asset is currently rallying on. Again, this is stage 2. You can see stage 2. This was the breakout, and we are in stage 2 rally. We're in stage 2 rally. You can see I've been on all these charts. You can see my footprint here, drawing some key levels, break of pullback. But clearly, we are in stage 2 in this asset. And lastly, let's end by looking at one of the banks. But let's look at palm oil. Palm oil is a very interesting sector. The agricultural stock, Okomu oil. Let's look at what stage we are there. Clearly, again, you can see this stock has been on a stage 2 rally since sometimes in May 2024. Clearly, Weinstein stage analysis is applicable. Nigerian markets might have its own intricacies, but theory is still honored. Price action has to obey some logic. Nigerian market is not abnormal. It's not unique. Don't be deceived. Don't think otherwise. Learn to seek knowledge. Knowledge will set you free. Now let's move on to the next section of this week's video. Now your turn. Pull up a chart of your favorite stock and tell me what stage it is right now. Drop it in the comments and I'll reply you with my take on what stage it is using my custom Weinstein method, algorithm, or code. Welcome back. In this month's portfolio breakdown, we are diving into the performance of our Talk Stocks with Me ETF rotation strategy for May 2025. The goal is to beat the S&P 500 every month and stay aligned with the strongest trends and manage risk using key market signals. Before placing a single trade, I use my macro dashboard to assess the market climate, including volatility, market breadth, interest rates, and sentiment. Once condition looks favorable, I deploy capital into the top performing ETFs from my watch list. If you want a refresher on the strategy or the pipeline behind my dashboard, I refer you to my market digest ending video on January 5, 2025, tracking my ETF tracking tool. Again, this ETF tool is still in beta testing and is not yet available to the public. I'm testing it for the whole of 2025 to be able to gather data that I can prove that the strategy works and the result is statistically significant. So how did we perform against the SPY? Let's break it down. Before I enter any trade, I look at the broader market mode. My checklist is simple but powerful. It's about knowing when to play offense and when to stay defensive. In the month of April, I stayed defensive because the market's breadth and sentiment did not favor me going long. Typically, I went long, but some of these trades didn't pan out well because I had not incorporated the market breadth into my strategy, and that's why currently I'm issuing the algorithm to be 4 versus 5 versus the SPY. Even though the SPY returned a negative performance in the month of April, I mostly stayed on the sideline. So what are my market breadth indicators? First of all, I'm looking for the VIX to be below 25. This tells me volatility is low and risk appetite is up. Also, I'm looking for the percentage of stocks trading above the 50-day moving average in the S&P 500 to be above 60 or at least 55. Also, I'm looking for the US 10-year yield to be stable and be below 4.5. This helps me this tells me that inflation worries is not fair enough. And lastly, I look at the CPC, which is the put to call ratio. I like to see neutral to bullish sentiment. I ensure that all this align before I start deploying capital. Now, in the month of May, these are a few of the trades we took. I am highlighting just 3 of them, but I remember all the signals that were generated from the algorithm all hit our target 2%, which is our minimum threshold. I think if I remember correctly, there was only one loss in over, if I'm not mistaken, 15 signals that were generated. I'm showcasing the top 3 here based on my scoring algorithm, and even as you can see, as that's up until the end of the month of May, you can see the comparison against the SPY. EWO returned 7.48, NARD 4.39, EWI 5.94, whereas at the average of the entire of this 3 portfolio is 5.94 compared to the SPY, which this month was an outlier. I mentioned it earlier in the video, it did 5.18%. So we're still able to outperform it, but you can see how we were able to even outperform the SPY from 2 out of our individual 3 positions. That's how I combine macro filters with sector rotation to stay one step ahead. If you're curious about which ETF are leading going into the next month, stick around and hey, let me know in the comments which ETFs you're watching. Let's proceed to wrap up this week's Market Digest by providing a commentary of the markets and outlook based solely on my established reference technical indicators. Just as a refresher, what are my reference technical indicators? Well, I have them identified right here for you to have a glance at. I identify whether the trend is bullish or bearish. Remember, the trend as either bullish or bearish based on these markers here. I'm looking for a bullish trend. I'm looking for the close price to be above the 20 EMA, the plus DMI to be greater than the minus DMI, and the ADX value to be greater than 25. These are all and conditions, not all. Similarly, for a bearish trend, I'm looking for the close price to be below the 20 EMA and the minus DMI to be greater than the plus DMI and the ADX value to be greater than 25. When neither of these options are triggered, then I have a neutral trend. Guys, I'm just trying to ensure that you understand what these signals mean from most other YouTubers. So most other YouTubers just tell you the signal. Maybe it's bullish or it's bearish. Here, I've moved past that. Here, I'm identifying the trend because to me, it's the trend that brings in those gains. It's the trends that trigger, it's the trends that emanate from a stage 2 advancing phase. So I'm looking for where we are either in stage 2 or stage 4. Now, let's get into it by looking at each of the different financial instruments. This week, the US large cap stocks tracked by the ETF VOO delivered a performance of 2.33%. Year to date, VO has delivered 0.55%. The short-term trend on the daily time frame is neutral, but with clear signs of optimism, while the mid-term trend established from the weekly chart is neutral. The Nasdaq, represented by the ETF QQQ, this week posted a change of 2.55%, bringing its year-to-date performance to 1.54%. The short-term trend established from the daily time frame is neutral, also showing signs of optimism, and the mid-term trend inferred from the weekly chart is neutral. US small cap stocks, evaluated by the performance of the ETF VTWO, this week posted a move of 2.79%. Year to date, VTWO has delivered a return of negative 7.10%. The short term trend observed from the daily time frame is neutral, also exhibiting signs of optimism, and the mid-term trend from the weekly chart is neutral. Canadian equities, tracked by VCN, printed a weekly change of 0.75%, bringing its year-to-date performance at positive 6.36%. The short-term trend on the daily time frame is bullish, while the mid-term trend established from the weekly chart is neutral. The Nigerian markets or equities, tracked by the ASI index, this week showed a change of 2.49%, bringing its year-to-date performance to positive 8.56 performance. The short-term trend on the daily time frame is bullish, and the mid-term trend on the weekly chart is also bullish. The oil commodity, tracked by the ETF USO, recorded a performance of 0.27 this week, which was relatively flat, and year to date, USO has delivered a performance of negative 11%. The short-term trend on the daily time frame is neutral, while the mid-term trend on the weekly time frame is also neutral. Finally, Bitcoin, tracked by GBTC, posted a change of negative 3.87% this week. Year to date, Bitcoin prices have posted a return of 11.42%. Still the best performing asset year to date. The short-term trend on the daily time frame is bullish, and the mid-term trend on the weekly chart is neutral. As we wrap up, the markets are painting a picture of cautious optimism. US large caps, Nasdaq, and the small caps are showing neutral short-term trends, but there are glimmers of optimism beneath the surface. Canada's market is gaining some bullish traction in the short run, while Nigeria continues to lead with both short and mid-term strength. Oil remains uncertain, leaning slightly pessimistic in the short term, while Bitcoin holds onto its bullish momentum. Albeit might be fading. Overall, we are in a wait-and-see environment. Momentum is building, but conviction hasn't fully taken hold. Keep your strategies nimble, stay focused on the trend, and remember, it's not about predicting the future, but preparing for it. Thanks for watching. Be sure to like and subscribe for more updates, and I'll see you in the next one. Chada.